SpaceX has had quite a week, a rocket test flight and a public IPO filing, both landing within days of each other. On the surface, it sounds like a story of momentum, but when you actually sit with the data, a more complicated picture starts to emerge, one that should give even the biggest SpaceX fans pause. Let's start with what everyone was watching, the Starship test flight. The third version of Starship lifted off, and yes, it deployed a set of dummy satellites and 2 test vehicles in space. That part worked. But here's where it gets interesting. The rocket had trouble relighting its Raptor engines, both on the booster and on Starship itself. And that matters enormously, because engine relight is precisely the capability you need to bring a rocket back to Earth in a controlled way. Without it, you do not have a reusable rocket. You just have a very large, very expensive single-use vehicle. And that distinction is not a minor technical footnote. It is the entire business model. Elon Musk has said publicly more than once that Starship is essential to keeping SpaceX financially viable. The argument goes like this. Starlink, SpaceX's satellite internet service, needs to replace roughly 1/5 of its satellites every single year just to maintain current service levels. That is an enormous ongoing cost. The only way to make those economics work long-term is to fly Starship cheaply, and the only way to fly it cheaply is to fly it repeatedly. Reusability is not a bonus feature, it is the foundation. Now, here's what the S1 filing, SpaceX's IPO document, quietly admitted for what appears to be the first time. Full reusability of Starship is not actually required to launch the next generation of Starlink satellites. That sentence deserves a second read. If you are building your entire cost structure around a fully reusable rocket and your own IPO filing acknowledges that reusability might not be achieved, you have a problem. Satellite analyst Tim Farrer put a number on it. Without full reusability, the cost per Starship launch could run as high as $100 million. That puts it in roughly the same cost range as a Falcon 9 launch, just with more lifting capacity. The big cost revolution evaporates. SpaceX has signaled it plans to start launching a new generation of higher throughput Starlink satellites later this year, 60 at a time, which is a massive jump over what a single Falcon 9 can carry. But if those early launches are expendable, the economics are far less impressive than the headlines suggest. If you find this kind of deep dive useful, take a second and hit like and subscribe. It really does help the channel, and make sure you see more of this kind of reporting when it drops. Now, Starlink itself. Because even on the revenue side, the S1 tells a more cautious story than SpaceX's loudest boosters tend to tell. Starlink generated $11.4 billion in revenue last year. That's genuinely remarkable for a satellite internet business, but growth is slowing. The rate of new subscriber additions fell throughout the first quarter of 2026. Analysts at Quilty Space projected SpaceX would close out the year with close to 17 million subscribers, but hitting that number would require the company to roughly double its current pace of growth. After recent price increases, that looks like a stretch. There's also a margin story hiding in that subscriber data. The average revenue Starlink collects per user has dropped from $99 a month in 2023 down to $66 in early 2026. That decline is driven largely by international expansion into markets where the company simply cannot charge developed world prices. More subscribers, but each one worth less. That math only works if the subscriber count keeps climbing fast enough to compensate. And competition is arriving. Amazon's Project Cooper network is scaling toward the threshold where it becomes a genuine alternative for customers. Amazon is still waiting for a regulatory deadline extension from the FCC, but that situation is resolving itself. Farrer makes a pointed observation in his analysis. If SpaceX, the company that's furthest ahead in this market by every measure, is already seeing demand slow, that may indicate the total market for space-based broadband is simply smaller than the industry assumed. That's a significant thing to acknowledge out loud. So here's where things actually stand. SpaceX is a real revenue-generating company with a genuinely impressive business in Starlink. But the path from here to the low-cost, fully reusable, Mars-capable future that has been promised is not a straight line.
The IPO filing, for all its optimistic language about total addressable markets, is also quietly acknowledging real constraints: a rocket that doesn't yet relight reliably, a subscriber base growing slower than needed, and costs that may not fall as fast as the vision requires. None of that means SpaceX fails, but it does mean the story is more complicated than the launch highlights make it look.